Welcome back, everyone. Next, we have Cobalt Blue Holdings, trades on the OTC under the symbol CBBHF and on the ASX under the symbol COB. It's a minerals processing and mining company with interests in cobalt, nickel, copper, zinc, silver, and sulphur. Happy to welcome CEO and Managing Director Andrew Tong. Welcome to the conference today, Andrew.
Thank you very much, Hannah. It's great to be here. As you just introduced, my name's Andrew. I'm the CEO and MD at Cobalt Blue. As Anna said, we're an Australian-based company listed on the OTC and the ASX. We're building an integrated platform which covers exploration assets all the way through to mining and processing and refining. At the heart of our company is minerals processing technology or expertise, and we leverage this to unlock value from the minerals hosting critical minerals. And it's listed a whole suite of those. I'm really going to focus on cobalt today, but we do have exposure to some of those other metals, and they'll come through as I go through our assets. I welcome you all today. This is the first time we're presenting at this conference, and please, you can connect with us from our website or on email or on LinkedIn. So why don't I start with the presentation? Our main goal is to become the leading cobalt producer in Australia. We've been building towards this for a number of years, and we're getting very close now to bringing our first project online. We've got 4 key assets, and each of these have a goal for 2026. Our goal for the refinery is to bring that to FID. Our goal for our Broken Hill cobalt mining project, which is a very large cobalt project in Australia, is to submit our permit applications this year. We have our own technology centre where we do all of our test work and piloting and demonstration scale work. We're going to be evaluating our processing technology for battery black mass, which comes from the recycling industry, and also undersea polymetallic nodules. We've also got an exploration asset where we have exposure to copper, silver, and some cobalt byproducts. As you may know, cobalt often is in the ground with nickel for nickel laterites or copper for copper projects. And in Australia, we have an opportunity through this exploration asset to potentially get some cobalt credits out of there. I'm going to walk through each of these assets over the next 10 to 15 minutes, and then we'll open up for some Q&A. So let's get started, and I'll explain what our project is around the refinery. Australia has lots of cobalt potential. There's lots of in-ground cobalt in Australia, mainly in nickel laterite projects. However, we don't have a dedicated cobalt refinery. We don't have one processing plant where all of that cobalt, small byproducts from other projects, can come together and be refined and value added. Our aim is to build the first dedicated cobalt refinery in Australia. We're really, really well advanced. We're up to the stage where we're almost at final investment decision. We have our permits in place. We have a feedstock agreement in place. We have a project partner with a Japanese trading house, Iwatani. We've completed our feasibility study. And we've, through our technology centre, generated samples of cobalt sulphate for batteries and cobalt metal for alloy, which ends up being in defence industries. Our goal this year is to finalise our offtake agreements, and the offtake agreements are obviously linked to project financing. On the next slide, I'll talk about those numbers. This refinery is a very small capital investment. It's around 60 million Aussie dollars to build the refinery. So in US dollars, that's about 45 million US to build the refinery. But the working capital is the same amount. It's also another 60 to 80 million Aussie dollars. The working capital is high because we need to have the cash flow to be able to buy feed material, produce the products that we want to sell, and then trade those out into the market. So in these refineries, the key risk is the working capital side, not the upfront capital. Through our minerals processing technology, we're able to take advantage of a much lower capital cost and a much lower operating cost than some of the other proposed refineries that are being built in the Western markets. In terms of our throughput, we're looking at 3,000 tonne cobalt to begin with, but we can grow up to about 6,000 tonnes. Those numbers have been chosen largely to accommodate all of Australia's cobalt byproducts into the future. In the short term, we'll be importing cobalt hydroxide from the DRC, bringing that into Western Australia. So from Africa to Western Australia, it's a very short trade route. bring that out of Africa straight to Western Australia, process that into the cobalt sulfate, and aiming to sell that cobalt sulfate into the Japanese battery market, into the European markets, and into the US, we're mainly looking to sell cobalt metal. So this refinery is geographically well placed to break into that supply chain. It's in a safe jurisdiction, so it gives a secure and stable supply of cobalt. And as we think about the risks on the cobalt market, the biggest risks are around supply chain vulnerability. So as we look at our next slide, you can see that the major producer of cobalt in the world is a DRC. So from the Democratic Republic of Congo, they produce approximately 75 to 80% of global mine supply of cobalt. However, most of those mines are controlled or owned by Chinese interests. And so that limits the sales of cobalt from those operations because of the different rules and regulations in various markets. They're not able to buy that cobalt or use that cobalt for particular applications. Our goal is to build the first midstream refinery in Australia to break into that market and to start to take away some of the market share from those mineral processing refineries. China currently controls around 90 to 95% of processed cobalt. And so this refinery has a very strategic opportunity in the current market. That's our first asset, is to get this refinery going. Our second asset is the Broken Hill Cobalt Project. So this mine, long-term, is going to support our refinery. This project is in Australia. It's the largest undeveloped primary cobalt project. What do I mean by that? Primary cobalt is where that project is principally going to be a cobalt mine because all the revenue comes from cobalt. There's no copper in this asset, and there's a very, very small amount of nickel. But essentially, it's a pure cobalt project, and that's quite rare in the world to have a pure cobalt project. Almost all the DRC projects are really copper projects with a bit of copper cobalt byproduct. And in Australia, as I said, there's nickel laterite projects which have a small amount of cobalt coming out of them. So this project is a great exposure directly to the cobalt market without the exposure to nickel or copper. We've been looking at this asset for a number of years. We have completed some feasibility studies. A couple of years ago, we went and did a trial mine. We mined 6,000 tonne of ore. We produced 600 tonne of concentrate. We processed about 200 to 300 tonne of that concentrate through our demonstration plant. So we've done very, very large scale demonstration testing of our minerals processing flow sheet. That puts us in the box seat to be able to bring this project into development. Now, you might be questioning, why did we go through that effort? Why did we spend $10 to $15 million through that feasibility study? And that's because the asset has cobalt in pyrite. As I've been saying, cobalt is normally there in nickel laterites or in copper, massive copper sulfide projects. But in our case, we have cobalt in pyrite. This type of geology hasn't really been exploited around the world. This type of geology exists in the US, in places like Idaho, and some places in Canada. And there's a number of projects which are on the starting books that are looking at using our processing technology to unlock cobalt from the pyrite. So over the last 10 years, we've developed up this technology, we've patented it, we've done our demonstration work on it, and we're now engaging in the permit applications for this project. We expect the permits to take about 2 years to go through all of the assessments by the government, and at that point, then we'll be able to bring this project to a financing decision over the next couple of years. Long term, we see this as a great asset to bring cobalt out of a mine in Australia and feed it into our refinery in the other side of Australia. So our refinery is going to be on the western side of Australia, and this mining project is in central Australia, in the middle of Australia. The key takeaway message here is that there's approximately 90,000 tonne of cobalt in this deposit, and that's enough cobalt for about 15 million electric vehicles using the 622 NMC battery type. The other byproduct from this project is going to be elemental sulphur. We're going to be expecting to make around 300,000 tonne of elemental sulphur, and that is approximately 1/3 of Australia's imported elemental sulphur requirements. So it's a very large project with very large national strategic interest in Australia. However, as we think about mining projects, you always need to think about the incentive price to bring a project into production. Over 2025, there was a market structural shift in cobalt. Cobalt is now back around 25 US dollars per pound. But you can see on this graphic that the last couple of years, the cobalt price has been very low. So what happened in 2025? The government of the DRC decided that they wanted to intervene into the market and to start to support pricing. What had happened is that a few mines had gone over supply. Those were some of the Chinese operations. And so the government stepped in February last year and instigated a ban on cobalt leaving the country. As the stockpiles and warehouses and the volumes of cobalt started to wind down, then in about October last year, the government swapped from a ban to a quota system. The first shipments under that quota system left pre-Christmas, and the government continues to assess whether the quotas should be moved up or down. Essentially, that government, the DRC government, is intervening in the cobalt market to control the supply of cobalt leaving their country. We see this as a really good thing. We see this as a great benefit to our project, but also to the global cobalt market, because in a lot of these critical minerals commodities, oversupply equals low price, which then disincentivizes new projects coming into operation. The other response that we're seeing for these sort of projects is from the Australian government, but also the US government and other governments around the world, where there's talk of floor pricing or national stockpiling of these critical minerals. So we're certainly engaged in some of those discussions, and we believe that there may be some floor pricing around cobalt over the next couple of years coming into the market in some of these markets. Let's move on now and talk about our third asset. As I've been saying, we have built our own technology centre. This allows us to do test work from bench scale to pilot to demonstration scale. We see this as our key differentiator to some of the other small cap junior mining companies. The ability to run our own minerals processing test work and to do process optimization, operator training. These provide the foundations for greater detail on the engineering, so a lot of technical support into the engineering design, but also it allows us ultimately to have a faster ramp up and commissioning of our projects because we've done so much demonstration plant work underpinning them. For our refinery, we've produced cobalt sulphate, and that's helping us with our offtake negotiations. So that cobalt sulphate we've produced is currently in some offshore markets where they're testing that to make PCAM and CAM. We're working with some of the Australian government agencies where we've provided cobalt sulphate to them so they can start developing up PCAM and CAM production in Australia. And we've also produced some cobalt metal, which is being assessed by some of the alloy industries. This year, we're planning to expand the technology evaluation specifically to the battery black mass market. In Australia at the moment, because of the low in nickel pricing, there isn't cobalt units available in Australia from the nickel industry. There are cobalt units available from the battery black mass recycled industry. Other people will collect batteries, they'll break them down and shred them, and then the cathode side gets ground up into a black material, and that's what black mass is. It contains cobalt, nickel, manganese, lithium, and graphite. And that material is what we've now been testing for the last year or so. Obviously, that gives us exposure to some of those other metals in there, but we believe that we can extract the cobalt out of that and then convert that into the cobalt sulphate and cobalt metal. The other project that we're going to be looking at this year is looking at the polymetallic sea nodules, or ocean nodules. These are collected from the ocean floor. They're principally manganese-rich nodules, so they might be around 20% manganese, but they have up to 1% copper, cobalt, and nickel in them, depending where those nodules are collected. And we've been doing test work on that for the last year or so as well. So these are two projects where over 2026, we're looking to expand our technology or R&D base and then use that to go into some commercial arrangements. Our last asset that I'm going to talk about today is our Halls Creek copper silver project. So this is an early stage exploration asset in the far northwest of Australia. We were able to advantageously acquire this asset about 12 months ago. We've done some scoping study work on it. It's a bit of an opportunity for us to bring some expertise to a small copper project where there are silver credits and also potentially some cobalt credits deeper down into the project. Obviously, copper and silver were really good commodities last year in 2025. So we see this as a slight diversification option for us, but longer term, with some of those cobalt credits coming out of a small copper project, as a prototype for other assets like this in Australia. As I have been saying, cobalt is generally found in nickel laterites or copper projects. We believe for us as a company, it's the copper projects that we are likely to get more exposure to than those very large nickel laterite projects. So those are some of our assets. You can see that we're building an integrated platform here from exploration through to mining through to refining. My key takeaway message is that we're really focused on bringing our refinery into production as soon as possible. I'm going to leave with our last slide, which is just our capital structure. You can read through this with all of the numbers there. We've just completed a capital raise towards the end of last year, and we'll be putting out our quarterly announcement in the next couple of weeks. But we're well funded at the moment with cash on hand to be able to execute our plans. Thank you very much, and I'll open this up to Q&A and go back to Anna now.
Wonderful. Thank you, Andrew. Yes. Talk a little bit about Kwinana Cobalt Refinery. Why is it so strategically important?
Sure. So we believe that the Kwinana refinery is going to be one of the first Western market cobalt refineries built over the next 2 years or so. So on our timeline, we're expecting to reach FID later this year, and then as a 12-month build. We have a site that's already an industrial site with all of the power and water connected to it. So we're expecting a 12-month build, which means that if on our timeline, by end of 2027, we can have cobalt going out to markets. Now, why is this strategically important? The world has a lot of mined cobalt, but it doesn't have a lot of processing capacity. That midstream is where the big market crunch is for cobalt, and we want to bring our project online as soon as we can to start meeting the markets. For example, in the US, there are foreign entity of concern, FEOC rules around purchasing of critical minerals. If we can build our refinery, then we'll be able to sell cobalt into those markets. That's one example. In the European market, they have diversity of supply rules coming in, and so they need to diversify away from Chinese midstream producers and look to markets like Australia. So this is a very strategic project to build out.
Perfect. And so talk about some of the key milestones remaining on the path to FID, and how is this company managing risk as it transitions towards development?
Sure. The two key milestones left for us to get to an investment decision are to convert our offtakes into binding agreements. So with our partner Iwatani, we need to secure an amount of our offtake, so a percentage of our offtake into binding agreements to have the certainty that if we build the project, we'll have revenue coming in. And so we have letters of interest around the offtake, but we need to convert those into binding contracts. That's what we're doing at the moment. As we do that, our target is to have product going to Japan, to France or Europe, and to the US. And in each of those markets, we have potential for project finance linked to those offtake contracts. We're also in deep discussions with the Australian government about supporting this project, potentially through some debt funding. Managing the risks. The big risk for this project ultimately is how do we break into the market as a new market entrant with new product. Our product matches up chemically with everybody else, but how do we get the market to accept us as a new supplier? That's really the key risk in most of these critical minerals. And to our advantage, we've run our demonstration plant, spent a lot of time on the marketing, but it does take time. And I don't have a shortcut for that, but that is our risk, is how do we enter the market as a new entrant? And what we've been doing to ameliorate that risk is generate product, test that product with people, and then continue to work with them around the conditions precedent for binding contracts.
Perfect. And talk about some of the key risks to BHCP.
Sure. So for BHCP, I think I covered some of that in my presentation. One of the biggest risks for any of these big critical minerals projects is price volatility on the commodity. And so we've been working at this project for the best part of 8 or 9 years, and we have seen cobalt boom at least 2 times and possibly 3 times, depending how you interpret that market. And so the key thing here is that we know the asset, the geology is well known. We've done the minerals processing, we know that. We continue to optimize that to look at savings on CapEx and OpEx. But ultimately, to bring this project into production, we need to have certainty for the banks on the pricing of our product. And that's where a number, especially over the last 2 years, a number of governments have started talking about floor pricing for these critical minerals projects. I won't mention other ones, but I'm sure all of the listeners are well aware of some of the work done in the rare earths business, where there are some floor prices being proposed for projects or have been agreed for projects. We're expecting for things like cobalt in our case, but some of those other critical minerals, that some projects will be able to secure floor pricing from interventionist governments to support these, because the worst thing for the banks is to enter into a project 2 years in, metal prices collapse, and then they've done all their money. So that's the problem with these projects, is the long-term financing. You might get a loan for 5 to 10 years. They need to have certainty on that price, and that's where some of these governments are now entering into these markets, providing floor pricing to guarantee or underwrite those loans.
And is the US government currently focused on cobalt?
Yes, it's on the critical minerals list for the US government. My comment on that is that over the last 12 months or so, the US government has done a great job dealing with what I term the acute critical minerals, the minerals which are in acute care that need very, very small markets, very, very difficult to work out how to solve those markets. So they've been heavily focused on those. Cobalt isn't quite in that acute scenario. We're sort of the next level down. There are tradable cobalt projects, products going around. And so I believe that the focus will move from those really critical, acute, small commodity markets to the bigger markets like cobalt over the next year or so. Cobalt is listed, as I said, on the critical minerals for the US. It's highly vulnerable in terms of imports of cobalt. And without talking too much about what the US government wants to do, your listeners may realize that last year the DLA, so the logistics agency, was commissioned to go and buy cobalt for their defence stockpiles. So there is a big focus on being able to acquire cobalt in the US.
And with that said, how is Cobalt Blue managing geopolitical and supply chain risk given the broader global push for diversified critical mineral supply chains you just mentioned?
Yeah, so I think, as I've been touching on through this presentation, we're really shaping up as integrating Australia with Japan, Australia with the USA, Australia with France, and so on. And we've done a lot of work in South Korea as well. Really what we're seeing is that over the next, say, 5-year period, we're not going to suddenly replace all of the cobalt coming out of China. Really what's going to happen is that there's going to be 2 different supply chains developed, and that's to meet with the regulations and the government intervention. So these will sit alongside each other, and we look at this as a portfolio issue. So for example, if you're a car maker and you need cobalt for your batteries, you're going to have a portfolio of supply agreements. Some will come through the China supply chain, some will come through a Western supply chain, in this case through us in Cobalt Blue. And so we really look at this as a portfolio for the end users, and we're looking to supply that small part of their portfolio where they need to have ESG credentials, they need to have security of supply, they need to have all of those certificates that go along with the supply chain that we're building. but it's not going to replace all of their cobalt needs. It's always going to be a bit of a portfolio diversification type strategy for them. In terms of geopolitical risks, yes, I think if all of the trade routes were to just cease at the moment and stop, then some of the countries would be very, very exposed for cobalt because they don't have these secure supply chains. But hopefully over the next 5 years, we can build out these chains, and then that'll start to reduce the geopolitical risk for trade disruptions.
Thank you for that. Can you break down the use of recent funding and how far the current cash runway extends across these major projects?
Sure. So if I can just explain a little bit, last year we raised around 5.5 million Aussie in early December or late November last year. Out of that 5 million, we're looking to spend probably about $1 million on the refinery, bringing that through to FID. We have about $1 million to spend on the Broken Hill permitting project. They're really going to be our two key expenditures over the next 6 to 12 months or so. We'll also be putting money into the Broken Hill Technology Centre. We are doing some third-party contract test work out of there, and so some of that does generate its own self-funding through those contracts. But that's really where we're going to be putting our large expenditures. On the Halls Creek project, the expenditure is probably only going to be $200,000 to $300,000 as we do test work on silver and cobalt this year. So we believe that we're well funded for our normal course of operation for the whole of 2026. But as we bring our refinery project to a financing decision, then we'll be back in the market looking to raise the capital for that. The capital stack for the refinery is approximately 60 million Aussie. So if I break that down, Iwatani are going to come in for 30%, so roughly 20 million. So Cobalt Blue for their share is about $40 million Aussie to move ahead with that project. And we're currently in discussions with some government support for that equity. And so once we have all of that lined up, then we'll have an equity gap, which I don't know what that is yet at the moment. But that's what we'll then take to market and look to raise funds for that.
Perfect. And if you can briefly talk about your planned approach to marketing and offtake sales for the cobalt products.
Sure. So in terms of the sales channels for the cobalt that we're looking at, we've got essentially with Iwatani there, their share of product is going to go to Japan. And so they're focused on cobalt sulfate going to Japan for their battery market. So we've worked very hard providing samples and integrating into the Japanese industry for cobalt sulfate coming into there. We've also been looking at cobalt sulfate into the gigafactories in Europe. So we've spent a lot of time over there talking to those groups. At the moment, we have a LOI with a French gigafactory. It's commercial and confidence, so unfortunately I can't say who that is. But we're looking really at supplying that cobalt sulfate into those gigafactories. If I can just step back for a moment, a few years ago, we spent a lot of time with the OEMs, so the car companies. But what we came to mutually realize, is that really the gigafactories are the ones that have the technical sign-off of the raw material supply, as opposed to the end user, which is the car company. So it's really the gigafactories that have A, the technical expertise to be able to assess raw materials, and B, control that supply chain from the PCAM and CAM and cathode makers into the cell packs. And so really the gigafactories are the key people that we need to be talking to in Europe.
Wonderful.
In the US and in other markets where we're looking to sell metal, a lot of that metal is ending up in defense, but also in advanced manufacturing. So those sort of markets are more through a trader or through a warehouse trading type system. And so we've been talking with some of the cobalt traders around potentially signing an offtake agreement with us. We would provide metal essentially into a warehouse, and they would trade it on our behalf out of those warehouses into those markets. As you can appreciate, for advanced manufacturing, one company might buy 5 tons, they might buy 50 tons, they might buy 100 tons. That'll go up and down. Because it's a metal, you can essentially warehouse that and sell it. Cobalt sulfate, on the other hand, is really a peer-to-peer market. You don't necessarily have those traders intermediary there. We make cobalt sulfate and we basically sell it to the user. And so the users for us are going to be the PCAM makers.
Perfect. Well, Andrew, this has been a fascinating presentation on Cobalt. We appreciate you and your time. Do you have any closing remarks for our viewers and investors today?
Sure. Thanks, Anna. It's been a privilege to talk with you and the team today. My closing remark is essentially where we've built a really strong starting point for our company over the last number of years. In 2026, we're hoping that this is a transformative year as we move into financing our refinery. If we're able to do that, then it's really going to transition Cobalt Blue from a company with a number of assets in development to one that's actually moving into construction. And we're really trying to move our company over the next 18 to 24 months into a cash flow business. That's where really we're trying to move up into that type of company. And so we really look forward to all of your engagement with us. And please send us a message, as I said, through the website or on email.
Perfect. Thank you so much, Andrew. And thank you, everyone, for joining us. Great way to end our day one of our virtual conference. We will be back tomorrow morning at 9 a.m. Eastern for day two of our virtual investor conference. Thank you, everyone, for watching, and we'll see you tomorrow bright and early.